Welcome back, everybody, to the Markets Unscripted podcast. Matt Caruso again here with my co-host, Jason Shapiro. How are you doing this week, Jason?
Well, thank you. How are you?
Good. Enjoying the somewhat quiet markets here, the holiday session. There's a lot of stuff we want to talk about. It's been quiet maybe for equities, but silver's been rocking and rolling. So plenty to talk about silver. Also, there's a lot of the COT charts finally updated. So we're going to dive a little bit into the COT charts, as well as kind of follow up with some of the stocks we've been talking about the past couple of weeks. So let's kind of just roll into it. First off, before we get to the silver and all of the rest, which has gotten a lot of attention, there's one chart I want to share with you. I'm not sure if this is part of your process, something I always pay attention to. I like the JNK ETF. It shows the high yield bonds. This has always been something I've liked to follow because it's tied to equities. It moves with equities. It's just a great risk on, risk off, but it's not equities. You could stare at that S&P chart till you're blue in the face, or the NASDAQ chart, whatever it is, but it's always same weightings. It's NVIDIA, tech has its impact and all of the rest. What I really like about the JNK, just for especially times like these where markets have really been chopping a little bit, especially the NASDAQ since October. I know the S&P was able to mark a new high. Let's bring up the S&P real quick. S&P just notched a new high, maybe a little bit of a failed breakout here in the short term. Qs have been kind of chopping sideways. So for a lot of people kind of wondering, is the market breaking down, is it topping or whatnot? One thing I always pay attention to is what are high yield bonds doing? For those who don't, wondering why high yield bonds, those, JNK stands for junk. It used to be referred to as junk bonds. It's not the nice term, I guess, for them. But if you're a low quality bond, or if you're a bond for a lower quality company, yeah, it's a bond. You'll get paid back, but so there's interest rate risk. It moves like a bond, but also there's risk of default because it's a lower quality company. So if the company itself is not doing well, the bond will be weak, just like the stock will be. So it gives a good identification on what the confidence is in the market as a whole. And just seeing the GNK still able to kind of push to new highs, for me, is still a risk-on metric here. It's been helpful. It's been helping keep me on side. And if you see, when this really starts to fall apart, it's because there's real weakness going on in the market. It doesn't always trend higher. Is that something you pay attention to, Jason, in your work?
Definitely something I look at. Because like you say, it gives a good indication of, for me, it's just another good indication of liquidity, right?
Mm-hmm.
If junk spreads are tight, then clearly liquidity is ample.
Right.
And if junk spreads start to fall apart, then obviously liquidity maybe is having a problem. So, yeah, I think it's valid. I think it's valid as all these as a measure of how liquidity is in the market.
Yeah, and so obviously that November was that period where AI stocks got slammed pretty hard. Many of them still haven't recovered or come close to recovering, the ones we spoke about. But there's still been a lot of strength out there. I've noticed, and I'm curious with you, I know you focus a lot more on commodities, or the futures rather, I should say. But I've noticed with markets, whenever there's like a somewhat steep correction, the leadership, the stocks that are going to come out leading after that decline can change. It's always it's that opportunity for the market to kind of reassess. Do we still want to keep pushing this like risk on for the very aggressive AI names? Do we want to maybe be in AI, but we're a lot more careful with what we pay attention to? Do we want to go into new names altogether? So it's interesting. A lot of the stocks in the AI space that have continued to be strong have been stocks we've spoken about. Stocks like actually, let's bring up Sienna real quick. And interestingly, this is remained strong. Speaking of the November bottom, this is one of those that have gone to new highs, and we've spoken about how this has been one of the relative strength leaders. But what's interesting is that this really only got running starting in September. Prior to that, this had been a laggard. So this is kind of like new on the scene, and it's an interesting example of how things will shift when there's a steep correction. Something you brought up was financials. Citigroup is one we've been looking at as one of the strongest. This has continued to push higher and higher, getting a little extended now, but clear leadership. So I'm curious, when you're looking at, do you have that kind of cyclical approach to any of the commodities or futures that you look at, or stocks in general? That's something I've always noticed, and I always try and kind of reorient myself and refocus myself on who the new crop of leaders are after each kind of like intermediate market correction.
I don't look at it with the commodities in that particular way, but it is something that happens, and that in a roundabout way, I am trading off of. I'm looking at positioning. So let's say we get, I don't know, some group of commodities that all went one way, and then I'm looking at positioning, and some have gotten crowded and others have not. Then I would expect when it goes reverses and goes the other way, that the ones that are crowded are going to underperform on the way up. Actually, it's a good segue kind of into that whole silver thing, I think, because while you're talking about markets that go down and then reestablish on the way up with new leadership, this is a situation where all these metal markets were going up, right? And when I looking at the positioning, what it showed, and look, the markets can go up, down. The positioning is not necessarily the be all and end all to that. But when I look at the positioning of what's gone on here, what was becoming obvious in the last few weeks, at least, was that the positioning and all these metals were ripping, right? Silver, gold, platinum, palladium, right? But what became obvious was that the positioning in the palladium was the most extreme, meaning relative to the history of where positioning is in these markets. Palladium was the one that that was showing the longest positioning. So what that tells me is that should things reverse, I would expect the most selling to be done in palladium because that's where the most longs are, right? So clearly, if that's where the most longs are, then if selling comes in, that's where the most potential selling there is. And that's kind of exactly what happened today. We're seeing these things getting crushed, but palladium's down like almost 17%.
Yeah.
Whereas silver's down, 8, which look, 8% in silver is pretty harsh as well. But 17, would you rather be short the thing if you were looking to short metals?
Yeah.
Is what I've been saying. Then palladium's the one you want to be short. Would you rather be short the thing down 17% or to short the thing down 8%? And on top of that, you could also argue you could do a pairs trade. You could be like, if you don't know the direction, but you want to play it somehow, long silver, short palladium. So you're long something that today is down, 8% silver, which is not great, but you are short something that is down, almost 17%, right? So that's not a bad trade. A 9% difference between two historically correlated assets is pretty extensive. And so that's kind of how I approach that is, in your case, you were talking about, okay, the markets came down and then it establishes new leadership on the new leg up. This is kind of the other way. The markets were going up and it established the opposite of new leadership. It had established essentially new laggardship on the way down here. But it was because, you could point right to the positioning to figure out, like, I don't know jack about the fundamentals of palladium. I can tell you, I don't know jack. And I would have no way of coming up with a thesis for why palladium would outperform or underperform silver. I would have no way of coming up with any kind of fundamental thesis on that, right? But the positioning thesis, first of all, it worked on the way up. Silver way outperformed palladium on the way up, as you could see. I mean, look how far silver is compared to like even those October highs, right? Look at that move from 50 to 80 or whatever. Whereas palladium went up, but didn't go up anywhere near that amount, right?
Yeah, there we go.
So you essentially, based on the positioning, could have had that trade on the whole way. If you were scared to take the directional bet, you could have been long the one and short the other and really made money the whole way and really been, and now that it kind of had this big turn today, you're crushing it. It's, an 8% move is obviously big in anything. Anything that moves 8% in a day is should be a pretty big P&L day if you have the trade on.
Yeah. You
So
know,
that's kind of how I approach what you're talking about there. So yes, in a way, it's taking a look at, okay, what's the new leadership, or like I say, the new laggardship, but it's basing it on, where is the relative positioning between the two things.
I find especially in the futures markets, it's so important to have that backstory like you built up in terms of those indicators you look at, because same with silver. I mean, I understand the silver argument. Like I was a market maker for years, almost exclusively with silver gold stocks. I mean, I get the argument, but the same argument that, you know, the debasement of the currency and all that's like perpetually true. It's not a new development that kind of explains a move from 48 to 80. So these kind of moves are obviously they're largely driven by positioning, by sentiment, by excitement, especially something that's silver, where there's, yeah, there's obviously industrial demand, but these big moves are not industrial demand driven. Typically, it's usually sentimental.
It's only now that people are saying that, right?
Exactly.
I mean, look, I'm going to be doing a video probably this weekend. I've been wanting to do this video for a couple weeks or a few weeks, and I just haven't, but I'm probably going to do it this weekend. But if you had come into the year, or even during the course of the year, with this belief of dollar debasement, okay? That was your theory. You want to play the dollar debasement theory. Okay. Well, how do you do that? What were your choices? In general, your choices were be short dollar. Okay, that was one way to do it. Two was be long metals. That was another way to do it. And three was, be long Bitcoin, which was a very popular way to do it. Right? Those were essentially the three major ways to be playing that theory. And I can tell you that, in particular, starting in the summer, the long crypto thing got very crowded to the long side. The dollar thing also started getting a little bit crowded to the short side. But the silver thing, in particular, when it pulled back a little bit more to the right of where you are, when it had that first pullback from 54, in there, a lot of longs got out during that pullback, because it's very hard for people to hold on to get, a market like that, right? They see it as overbought up there at 52, and it went up a lot, and so they can't hold. So a lot of people got out of longs down there. So that was the least crowded of all those trades by a long shot, which I would argue non-coincidentally led to that being the best trade as the way to take advantage of that thesis. Now, I wouldn't be getting long, me personally, wouldn't be getting long something just because I think there's going to be dollar debasement, because I don't trade these huge macro themes, right? But it'd be long silver anyway, just because the positioning wasn't, the positioning was actually crowded. I'm going to say crowded short. That's going to need some explanation, but essentially crowded short after that little pullback there. So that's really, you could have got long that just based on that alone. But again, if that's not how you want to play the game, if you want to play the game based on your macro thoughts and your macro thesis and all that, and that was your macro thesis, which one to do? Well, this positioning got you, I can assure you, in the right one, and kept you out of the wrong one, right? If you want to point to these metals ripping higher and you want to now say, oh, well, that's because of dollar debasement. Okay. I don't know if there's any way to prove that, but it's fine. If that's what you want to believe as why it happened. Okay. But what a sin to have been right about dollar debasement and to have bought Bitcoin instead and not made any money off of it, right? That would be horrible.
Actually, the inverse kind of happened to me in 2020, 2021. Like, I was still playing the precious metals. It made some money off the COVID bottoms, playing some of the golds in the route, but they didn't continue. Whereas Bitcoin went vertical after that, and that was kind of a miss. Like, at that point, I still didn't really. It was still difficult to trade the crypto stocks and all of the rest. But good example of, like, for me, that was a real point of frustration. Where it's like, damn, I know they're printing money. I'm positioning for it. I made some money, but I would have made many, many more times that amount of money if I was just in the right asset. So, I mean, like, so often it's the macro view, all that's important, but the vehicle you choose to actually get the job done is just as important in a lot of cases.
Absolutely. And when you have the positioning on your side, I find you could be wrong on the macro theme and make money anyway. You know, like I say, is it because of the dollar debasement thing that all of this happened? I'm not here to say it's not, but I don't know. You know, we never know what the real reason things happen is, right?
Well, it's also
Like I
not
say,
new in the
now
past
people
two
are coming
months.
up with other reasons for why silver was, you know, the top performer, right? Because the industrial use, because there's a lot more silver than people realize that goes into making, you know, these electricity needs that we need, and what, you know, the computers, and you know, the whole AI thing. Now all of a sudden, people are saying that a lot more silver is needed for that than was realized. I don't know who wouldn't realize it. Well, you know, these people spend all day analyzing this shit. You're just realizing now that you need a lot of silver. Like, to me, that's silly, but whatever. It doesn't matter to me, really, the reason, as long as I make money. And if you get into trades where the positioning is in your favor, you can make money even though maybe you got the macro thing wrong, you know? And that's really the beauty of it.
Yeah, no, I agree. And so, you know, looking at silver now, let me just bring silver back up just to kind of discuss it from a current position instead of just, you know, doing Monday quarterback type of a discussion.
Yeah.
Not a trade I've been focusing on lately. Wish I had, you know, with this kind of move up. You know, speaking of, you know, new leadership off of a market pullback, you know, into that November pullback, this is one of the first assets to kind of break the new high. So that clearly showed leadership. But
Oh, it
something
was
I've
deep.
always paid attention to, even when I traded the metals, was very much the relationship of the metal stocks versus the metal itself. A good bull market, just like you always kind of say, you know, the QQQ should typically lead if it's a good hot bull market. The mining stocks, especially the junior mining stocks, should really lead if it's a really good bull market. And interestingly enough, you can see they really got hot starting in July when silver had this move up. It's interesting to see as silver really went vertical here. I mean, this made new highs on November 28th. If you look at November 28th, that's
Yeah,
right
the
here.
miners started lagging on this move up.
Start lagging big time. So,
Yeah.
look, you know, technically, obviously, this looks like a major reversal for silver. It looks like a climax top. All the indications are there, but you know, anyone looking at that chart can see it. For me, one of the also concerns is that, you know, those who are in the mining business, who are running the companies, who can see a little further into the future, typically, are not, you know, buying this type of move up. We're not seeing a lot of that strength in stock. So that's a kind of a short-term concern for me. How did positioning change? Maybe if you want to bring up a COT chart, we can take a look at positioning. I know those are up to date now. So I'll
There's still, we didn't get last week's because of the Christmas holiday, but they were up to date last week. But this week we will catch up again.
okay.
But even then, let's see if I can figure out how to do this.
We have to get a producer here on board with us. Okay, great.
You can see that?
I see the heat map, but I don't see the chart.
Okay. Do you see that? No, I'm showing the wrong screen, I think. Let me try again. I'm sorry.
It's all right.
You're dealing with a 58-year-old man.
We don't want this YouTube video to go viral because you share the wrong screen. If you catch my, as long as the right
So
stuff.
this, and again, there's a little nuance here that I'll explain real quick, but these are the people. So these are the speculators, the red and the blue, large and small speculators. These are the commercials, right?
The commercials are the green.
Yes.
Okay.
So I understand that you're going to tell me, look, the commercials are short, the speculators are long. So why are you saying that they're short silver? And the point is each commodity, I don't want to get too deep into this today, but each commodity has a history, and what you're looking for is relative to history, you know. Like they don't really, the commercials never really get net long silver very often because the commercials are the silver miners. They are selling, you know, as a hedge. Again, you know, they're basically locking price in by selling, right? They're digging silver. It's just the same thing as
Right.
the gold miners. They're digging the stuff out of the ground and they're selling the futures to lock in their price, right? So they're always going to be net short. Not always, but 98% of the time they're going to be net short. But it's a relative thing. So like what I do with this data is I index it according to history, and then that tells me if it's crowded or not crowded. So you can see, for example, the commercials here, right? This is the least short that they have been in this entire time, right? You see that? So it's the
Yeah, it's a
least
little hard to
short.
see
Yeah,
yeah,
it's the
but
least short that they've been, which on my index would make it look like long, because it will
right, right.
index it from 0 to 100. So that would give it 100.
Well,
So
how far back is a look back for your index, Jason? Do you look back 1 year, 5 years, all of the data?
that's kind of a secret that I
Oh,
do
okay.
not give out, but it's usually in the 1 to 1.5 year time period.
Okay.
Because that's what has worked. It's all been back tested, and then after I back tested it, now it's been 25 years of actual testing. So anyway, that means you just have to hopefully understand what I'm saying about the relative to history, right?
Yeah, they're always short, but this is the least short they've been
Right. So
in a
let's
couple of
call
years.
them long. The commercials are
Yeah.
long, right? Long, so to speak, relative to history, which makes the speculators, because these are equal and opposite, short. Yes, they're a little bit long, but again, it's the least long they've been in this whole thing, which means they are short relative to history, right? Which is why silver would be the place to be, because the speculators are short there and therefore have the most apt to be squeezed to the upside.
Mhm.
Whereas if you go and take a look at the palladium chart, okay,
Yep.
here's the commercials.
Yes,
Okay,
sir.
the commercials were super long down here, right? But you can see they've gone net short here, the shortest they've been for this entire history, right?
Right, right.
So therefore, and that makes the speculators long. So that's the one you wouldn't want to be in, because that's the one that has the least amount of potential buying to be done, because they've already bought. Could they buy more? Of course they could buy more, right? But on a relative basis, they've already bought a lot, whereas they haven't on silver. So I've been saying sort of for months now, but really ever since this went negative, really since about here, right? During this pullback, if you wanted to be long metals, this data was indicating silver was the metal to be long. And if you wanted to be short metals, this data was indicating palladium was the metal to be short. Now you could say, oh, well, it said be short, meanwhile the thing ripped, right? It doesn't mean just because of this data that you get short, right? You need, as I always say, some form of market confirmation, right? To me, if that's what you were looking to do, the confirmation was this day. We had this big outside reversal day here on what was a positive day for the other metals. So this was a failure in palladium. All the metals were ripping. If I were trading it, I would have shorted the close here with my stop on a close on the high of that day. You could see that wouldn't have worked very well on Friday. The market went up. It did not take out that high, but it certainly would have been a losing trade during that day, right? But would not have stopped me out. And then today I'd be sort of reaping the benefits. If I were trading this, I would actually be short this and long silver. I'd have both sides of it on. So I wouldn't have lost that much. It did outperform silver on Friday, palladium. This will, even when this works, it does not mean it's going to work every single day. Unfortunately, I wish it would, but it's just not how things work, unfortunately. But I would have certainly lost a little bit of money on Friday because palladium did outperform silver. But if you look at it now, the underperformance of palladium to silver is pretty extensive. You can see it's already, look, palladium's all the way back down to these mid-October levels, right? Whereas silver, mid-October is here, right?
Yeah.
I mean, it's a massive outperformance of silver over palladium. And like I say, I would have zero chance of coming up with a of an analysis that would tell me that was going to happen, other than the positioning.
In a situation like this, would you prefer to just get short palladium and ignore silver, or do you like to put spread trades on? Like, I'm long silver, I'm short palladium, so and then if you did put a spread trade on, how would you manage that spread?
I usually don't do the spread trade. I usually just do the individual trade.
Mm-hmm.
A lot of times it turns into a spread trade. Not a lot of times, but sometimes if there's super short silver and silver's acting the way I need it to act to get long, I'll get long.
Mm-hmm.
And then at some point, if there's super long palladium and palladium fails and I need to get short, well, then I'll get short and I'll have the spread trade on just by definition, right?
Mm-hmm.
Well,
Mm-hmm.
not by definition. It's not really the spread that I have on. It just happens to be two trades, that I have on, long one, short the other. I think in this situation, because the volatility is so extreme at this point, I think that if I were to trade it, I probably would do it in the form of a spread, just because you're dealing in markets that are moving, 10%
Yeah.
a day. That's a lot of risk, you know. I mean, that's 6 good months of an asset most of the time, right? An asset goes up 10% in 6 months. You're on a 20% a year pace. That's a pretty good return for a year, right?
Yeah.
These things are moving 10% a day right now.
Mm-hmm.
So for me, just so I would have the ability to sleep and breathe, I would, if I were to trade these right now, I would be looking at doing the spread trade. And how do I manage it? I just size it based on, obviously I have to adjust for the sizing of the contract, right? First, equalize that, and then adjust it for the relative volatility as well, and therefore be long one, short the other on hopefully what is a market neutral basis. The volatility, of course, is going to change over time, right? The relative volatility will not hold steady on a daily basis, right? But in general, you can come close enough, I think, to size it to the point where you're not going to lose much value based on improper sizing. You'll come close enough that if you get the trade right, then you should be okay. That's what I find.
For those who don't, spreading is a bit of a more advanced concept. For those who don't fully understand it, it's just a kind of a quick recap in maybe easier to understand terms. If you think back to 2008, when the Apple hit the scene with the iPhone and BlackBerry still had their BlackBerry devices, which are pretty much all gone now. If, let's say, look, I don't know what the market's going to do, but I think Apple's going to definitely outperform BlackBerry and eat their lunch. Well, I can buy Apple, I can short BlackBerry. That way, even if we go into the financial crisis, well, I lose on Apple, but I make on BlackBerry. And if we go into a bull market, Apple should do much better than BlackBerry. So just to what Jason's talking about is like saying at these point levels are just so erratic, so volatile. It's hard to take a big. So if he did want to play it out, because the position he's pointing to that just palladium should be so much weaker than silver, he'd rather kind of short palladium, buy silver, and that way, even if there's another rip higher in the metal, silver should keep doing better than palladium. And if things fall apart, palladium should be weaker. Just kind of a little bit.
I had a friend, by the way, who, in fairness, he ran a big hedge fund at the time, but he became a billionaire with the short Apple. Long Apple, short BlackBerry trade.
Oh wow, I can imagine. What a trade that was.
He held that. He held that trade for like, I want to say, almost 8-9 years.
Wow.
And he became a legit billionaire. He's on the billionaires list. But obviously he managed a lot of money too. So he didn't make $1 billion in his own account, but he made billions for his clients and got his 20% and became a billionaire on that trade. Just that one trade. We went and looked at his returns, and he had a great period, 8 to 9 year period of returns. And, he's a very macro guy and he's a very tapped in guy. And now that he's sort of a multi-billionaire, he makes the news quite a bit, and he's friends with, Besant and all that. So he makes the news a little bit nowadays. Mm-hmm. He didn't back then, but we looked at his returns over that period, and 95% of his returns came from that one trade.
Wow.
long Apple, short BlackBerry. Everything else that he did with his macro, and he has, dozens and dozens of people working for him, and analysts, and hundreds of other positions in this trade and that trade, and macro Latin America, and whatever the hell else he does. None of that did shit. But the guy crushed it off of that one trade.
I love that. I love that Apple BlackBerry story because I studied it so much from different angles. It's a amazing case of following the technicals because at the time things were new. It's an amazing case of just looking at how the fundamentals are doing. It's an interesting case of like hubris of management because BlackBerry management there was two co-CEOs. I mean, if you look at what they were saying back then and all the rest, like they weren't scared of Apple. Even there was a what's his name? Who was in charge of Microsoft back then? Steve Ballmer. He was
Oh, yeah.
laughing at the iPhone because he said no one's going to pay that much for a phone and it's ridiculous and all the rest. So there's so many lessons from that era. Anyone could look back and say it was easy pick was Apple and all the rest, fine. But it's amazing. Even the smartest guys in the business who were running the companies competing thought that Apple's iPhone wasn't going to succeed. So many
I,
interesting lessons.
I still have somewhere in my files the report that was written by the guy at the time who was sort of known as the number one telecom analyst on the street. He worked for Morgan Stanley. And he did his analysis of the iPhone when it came out. And his conclusion was basically, eh. And he literally, the words in his thing were, it's okay, but it's not like it's a game changer.
Yeah, right.
Those were his words. It's not like it's a game changer, which if you think about it, the iPhone may have been the single biggest game changer of our lifetime, from
Incredible.
that perspective, right? And this was the number one rated telecom analyst on Wall Street.
And and think about
I
it.
kept that article, and I still have it somewhere just to remind myself of things like that.
No, and think about it. It's hard to see the game changers in real time, and then at the same time, so many times people are always going to say that they have a game changer, but you can't just believe all of that because everyone claims they have a game changer. So just to show some of the landmines that we have in real time, which seems so easy. I remember someone was telling me one time, oh, it was so obvious Amazon was going to like be the king of e-commerce back in like early 2000. And it's like
Right.
the stock just fell 98%. Yeah, it was like easy buy. Like the whole, you don't know
Right,
what companies are going to survive. They're just selling books pretty much at that point and the whole rest of
right,
it. So
right.
so much is just so easy in hindsight. And then in real time,
Yeah.
it's amazing how it's just a totally
In
different game.
retrospect, it's real simple.
Yeah, yeah. If only I
I
had
mean,
yesterday's newspaper.
you say like people miss these big themes, right? In retrospect, it's easy to see them, but in real time, they get missed a lot, and that is one thing I've been saying for a few years now. Not because I caught it, but because the market was catching it, and people were fading it, right? The whole AI theme and the whole NVIDIA theme, right? When it first started, 6 months, a year into it, people were still fading it the whole time.
Yeah.
And I was like, this could be, and we still don't know if it is, but I kept saying, like, you have to, I understand you want to short this thing because, and this is a habit that I see now all the time. And I knew about it before, but now that I have like a lot of people that I see in live time on our Discord and stuff, and I see people on whatever social media and shit, I see what they're doing. This is becoming to me one of the most obvious, popular, and worst trading habits that people have, right? Which is they missed it, therefore they have to catch it on the other side, right? This thing is going straight up.
Yeah.
I missed it. Therefore, I'm going to be the guy who tries to short it. And that's what we were getting in NVIDIA, right? For really the first year and a half to 2 years, I would argue, after it really took off, that's all we saw. And I kept saying to people, like, listen, I get it, but I'm always trying to think of, no matter what my trade is, where it's going to go wrong, right?
Yeah.
And so I kept saying, like, on my newsletter and on the conversation we have, like, if you're trying to short this, you have to consider the fact that, and I don't know anything about AI, that's always my line, right? But you have to consider the fact that maybe this is a huge game changer that people are underestimating? And if it is that something that you want to be shorting? Right.
Yeah.
And then, of course, it goes back to what I always say, which is if you want to short it, that's fine, but at least let the market agree with you first, right?
Yeah. Yeah.
Which it never really, maybe a couple times it did on Nvidia, but for the most part, the market did not agree that you should be shorting Nvidia, right?
Hmm.
But it's like you say, I think that people are missing, and still people are fighting the AI thing. And look, they might be right, but all I'm saying is if it becomes the game changer that it could be, you're missing the forest for the trees. And there's a reason why not everybody gets rich, and most people do not get rich, right?
Yeah.
And it's because that's what they do. They're missing the forest for the trees. You know, you haven't been long the AI trade for the last 3 years. Well, I'm sorry. Why? Because you missed it, and so therefore you needed to short it because you needed to get the other way. Like that's
Hmm.
just silly. And at the end of it, it's just fighting the tape, obviously,
Yeah.
and it's fighting the tape for all the wrong psychological reasons. But if you get into the fundamentals of it all, we could come back here in 10 years and AI turned out to be everything and more that it was supposed to be, right? And all these stocks, Tesla and whatever, are up 10 times and all that shit. And you can go back and say, oh, that was so obvious. We knew that AI was coming. We knew that Tesla was making the robots. We knew that NVIDIA was making the chips. We knew that, that was just the most obvious trade. But how many people really will catch that? If these things 5x or 10x in the next, 5 to 10 years, how many people are really catching that?
Yeah. With
I don't think.
and with size and holding it throughout that period, which are the other
No,
two
that's
categories.
right.
Anyone could make a trade with a 1% position size. Like, that doesn't really move the needle the same way. If you're going to put it on with size and hold, how many people are going to pull that off? And not many. That's the real differentiator.
Right. And it's because, and again, it goes back to the good thing is if you are trading instead of thinking, right, then you will catch it. Because
Hmm.
if those stocks we talk about this every week, right? If those stocks are going to do that, or if some stocks are going to do that, or if one stock is going to do that, I don't care, right? It will be outperforming, right? It will be the relative strength leader. I don't care what stock it is. If it's
Yeah.
Tesla, if it's something else, if it's that one that you just pulled up, it doesn't matter.
Hmm.
If it's going to tenfold, then it's going to be a relative strength leader. Period. The end, right? And so if you're just trading it based on that, you can catch it.
There's
Forget
the
about the AI and the this and that. Have it in your mind because I find it does it with me. I don't trade based on this stuff at all,
Mhm.
but it still helps me. If I can build the macro story in my head that will support the trade that I have on, it makes me feel better. I still stop out where I'm supposed to stop out, but I like to, for whatever reason, even me, as someone who doesn't want to do this at all, I still do it. I like to build the macro story that will make the trade make sense.
Mhm.
And also, I like to build the opposite macro story so that if I'm wrong, I mean, it doesn't, like I say, it doesn't really matter because if it goes through my stop, I'm getting stopped no matter what. Okay.
Yeah.
It doesn't have to be like, oh, I changed my macro view, so I'm getting stopped. It doesn't have to be that, right? But again, I just like to have it in my head so that
Yeah.
it helps me. It helps me. So, if these stocks that you're talking about, that are the relative strength winners and they're breaking out, and in the last drawdown of the market, they held the best. And then on the move up in the market, they went up the most. We talk about that every week. Those are the stocks you want to be in. And if
Yeah.
it helps you to say, okay, this is an AI stock, so therefore it's going to benefit from this AI revolution, okay, then okay,
Mhm.
But stop saying AI is a scam, and who cares?
Yeah.
If AI is a scam, then then these stocks will start to underperform. They will be
Yeah.
the relative strength, the relative weakness at that point, right?
And market trends take time to shift. Like, you don't go from straight bull market to just straight back down to zero. Like, there's a transition period. To your point, like, it doesn't. You don't go from typically, I mean, anything can happen if there's like obviously some kind of scandal news, but you don't go from a
Right.
big old beautiful bull market straight right into a big old bear market. That's why there's tops and all. And like they say, bottoms are an event. Tops tend to be a process. The people who were in them on the way up, they start to distribute to those who kind of are late to the idea and to the story. And by the time they're saddled with all the stock, you see it in the underperformance and that they're being sold into, and then it ultimately breaks down when people realize, oh, this is overdone type of thing. So,
Yeah, let the market tell you
yeah.
that. That's so important. Again, it's something we say every week. It's something I say every day.
Yeah. Well,
And people
the thing
still
the
don't
thing that
want to
got in
do it.
my mind was when I was a kid, my dad first showed me markets. It was, what's a good dividend yield kind of stuff. And then when I got William O'Neill's book, How to Make Money in Stocks, kind of like the thing that stuck in my head, I remember him saying was, how does a stock go from 50 to 100? First, you have to go to 51, 52, 53. You're making new highs along the way before you double kind of thing, So
100%. How do you catch a 10 bagger?
yeah,
First
exactly.
thing,
Right.
first thing is it has to double.
Yeah. Yeah, exactly. Exactly.
But
So,
the market will tell you, and you're right about the tops, like anything can happen. But if you look at any of these tops, and this is something that I have fucking, excuse my language, but I've ranted about in particular for the last few years, but I've ranted about this on like YouTube videos. Stop trying to short all-time highs, right? Because if you think the market's going to crash, that's fine. But if it's going to crash, it ain't going to crash tomorrow.
well, the 29 crash that they call a crash didn't just crash off the highs. First you had a bad break, then it made a big old lower high, and then you went into what is the crash that caused the Great Depression. Like there was, same with 1987. 1987 didn't crash right off of the high. There was a bad break, lower high, and then the whole kind of multi-day program trading thing happened.
I think the market in '87 topped in July or maybe August, and
Yeah,
didn't crash until October.
yeah.
29 too took months. Look, '08. Everyone talks about October of '08.
It topped in '07.
It topped in '07. You had
Yeah,
a year
yeah.
before it crashed, right? So I totally agree with you. Like, what's the rush? You think that a market? I would be willing to bet that you can't find a market. I don't care what market that crashed the day after it closed at a new all-time high. It just doesn't work that way.
Yeah.
We don't close at a new all-time high and the next day it crashes. The next day it could go down, of course, because any market can go up or down any day, right? But it's not going to close at an all-time high today and be down 40% tomorrow.
Right.
It might be down 40% in a month. I don't know. But it has to start, And if you're right about these moves, it's like the same thing I've been saying about this whole Bitcoin thing. If you believe that Bitcoin is going to $1 million, okay, good. I hope it does. But it ain't going to $1 million until it stops underperforming.
Yeah.
So just wait until it stops underperforming before you get crazy with it again, And hopefully you'll be right, and hopefully it goes to $1 million. But it ain't going to $1 million when it's underperforming every single freaking day, like it's been doing lately, like it's been doing essentially since October. And I read these things, and people get so stuck every day on X. These Bitcoin people are like, oh, today's the day when Bitcoin, is going to turn it around, and we're going to be at 250,000 any day. Okay, if we're going from 80 whatever thousand, whatever the hell it's at now, 87,000 to 250,000, do you need to buy it right here?
Yeah.
Well, can't you buy it if it starts outperforming, which would be maybe like around 92,000 or something like that? Or, can't you buy it then? Because doing that would have saved you from buying it this whole way down. If you had waited, ever since that October 10th thing that happened, if you had waited ever since then until the thing started to outperform and show relative strength, you still wouldn't have bought it yet. And it would have saved you a freaking lot of money. Believe it. I beg people, this has become my main message to people. Let the market determine for you. Have whatever freaking opinion you want. I don't care. Believe that Bitcoin's going to zero. Believe that Bitcoin's going to $1 million. I don't care, right? but don't fight the market. Let the market agree with you, and then go with it, and then make all the money that you want out of your view.
Well, we come from different sides. Like you're more reversion to the mean kind of guy. I'm trend following type of guy. But it's funny, like both sides have their fatal flaw. And again, like I'll see more the fatal flaw of trend following. You'll see I think the fatal flaw of your process is just that somebody saying, "Oh, it's gone up too much. It has to fail. Let me short as it's going up," and they get run over. I think the fatal flaw of trend followers is they know they're not going to catch the bottom. So then after when everything becomes very popular and the stock's already had way too big of a move, they just kind of run in because everyone's talking about it. But by then it's a crowded trade. So it's just you need that balance in between. It's like those are the two fatal flaws of both sides, which will get you in completely different ways that you need to overcome, which is interesting. But no
No,
free
which
lunch
is why
again.
I love positioning
Yeah,
and not price.
yeah.
As I always say, because that's what's going to tell you when it's crowded is the positioning.
Well, while we have the COT chart still up, before we move on to something else, are there any other markets you want to take a look? Anything else that you've noticed is signaling an extreme in the markets? I think I saw copper had some bearish commercial positioning. I don't know if maybe you want to bring a Russell, whatever you'd like to
This
show.
is the Russell, okay?
Mm-hmm.
This is the green is the commercials. This
Yeah,
is the shortest commercials have been Russell this whole way, really, since here.
interesting.
Which here was not so great, right?
Mm-hmm.
But from here it was pretty good, right? If I were going to be shorting stocks, I'd be shorting Russell. This is the Dow. This is the commercials. They're long. If I were going to be long stocks, I would be long. I would be long Dow. And we talked about this last week. If the
Mm-hmm.
market is going to go up, it's probably going to be led by Nasdaq anyway. But we don't know, unfortunately, if the market's going to go up or down. So from a risk-adjusted basis, I would be looking to be long Dow if I were going to be long and short Russell if I were going to be short. And listen, for those who don't trade the individual indices, although you can obviously trade the ETFs for them, but are looking at stocks to trade, again, if the Dow is where the best risk reward is, well, then you can start looking at the Dow stocks, which Dow stocks are going to be best for that. And then you go through your charts and which ones are showing the best relative strength and blah, 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 and that's kind of a way that you can pick
Mm-hmm.
stocks. And if you're looking to be short, you can go through your Russell stocks and look for the ones that are showing the worst relative strength. They're the most relative weakness, I guess,
Yeah.
and start to just think about shorts there. But I guess I've talked about this before, but it's the same thing. If the COT is saying, okay, the indexes are going to be good, and the COT is saying the metals are going to be good, well, then you start looking at metal stocks,
Mm-hmm.
right? And when that flips, you start looking at other things. But yes, copper you mentioned, crowded. Okay, this is the commercials right here. The last time the commercials were here was here.
Yeah.
I'm not making this up. I'm not making this data up. I'm pointing to a place on the chart where the commercials, I'm not looking at price, okay? This is where the commercials were, super short, right here.
Mm-hmm.
And look at what copper did after that.
Are you personally actively looking for like a news failure right now on copper as a trade to take or just
I kind of am, yeah.
okay?
And just so you know, we talked about the relative thing, but this is where the commercials were, let's call it it's the least short, okay?
Mm-hmm. Mm-hmm.
But on my index, it would show them as the most long, right?
Mm-hmm.
Because it's relative, was right here. I'm not making this up. You know what I mean? Like, I'm not making this up. It was right here. And look what copper did after that, right? So, does it work all the time? No. For me, this is why I get out at neutral. I probably would have been out of this somewhere around here, or maybe around here if I was luckier. Because then it goes neutral, and then I just wait and all that. But all I'm saying is they're massively short here, and rightly so if you think about it, right? AI and copper, and China and the whole mining thing, and we know why, right?
Right.
And that's always going to be the case for a crowded trade, right? It's crowded for a reason,
Right.
because it makes sense, right? And then the point is, if it makes sense to too many people, if you've been trading long enough, you know this. If you haven't been trading that long, you may not know this, but you should know it. The market is a discounting process. So if all the things point to bullish and everyone can see it and it's obvious how bullish things are, then it's probably getting tired. You know,
I think that's why
tops
most
are.
people who are new can't understand how sell the news works. You know, like they say, well, the news came out as good. Why would something? Which, again, if you've never heard that before, you'll learn it at some point in the near future, I'm sure. But it's sometimes, you know, everyone's waiting for. You know, let me share my screen. My favorite example of that. Let me just see if I can share my screen a second here. My favorite example of that are the cannabis stocks. Let me go back to that. I don't know if you remember what I'm talking about, but let's say CGC, which was one of the highest flying stocks of that era. So I have some of my old markups here. But if you look at where Canada decriminalized marijuana, which caused this, which was the reason for this big run up, it literally decriminalized marijuana right here. So if you were
Right.
buying these stocks or you were late to the trade and you bought it here and say, okay, great, they finally signed into legislation. They did.
It's
Canada
beautiful, man. That's one
decriminalized.
of the most beautiful charts I've ever seen in my life.
Let's just get so it was October 2018. The national is when they signed the bill into into whatever being
Right
alive.
there, reversal day,
A
new
reversal
high,
day on a weekly
reversal
chart, and you
day,
just literally
news failure.
never got back there again. We had, during COVID, everything kind of went up at some point, but
Right.
that was,
I mean, news failure. Like I didn't make that concept up. A and B. You know, the news failure is something that Helmut Weimer gave me. That was what he used to call it. But I mean, buy the news, buy the rumor, sell the fact is as old as the hills, right?
yeah.
It's the same thing. News failure, buy the rumor, sell the fact. Selling the fact is news failure. That's an incredible example right there. Can you go back to that
Yeah, sure. One second.
or any of the cannabis stocks? Because I'm going to make a comment on this.
It's funny because so many are delisted now. They're not even around anymore, but let me bring
I
it.
was in the cannabis business
Okay.
on a private equity kind of way. I invested in some cannabis operations in Rhode Island back when I moved up here in 2013. Rhode Island was one of the first states to allow medical, and I was investing in some operations that were doing that. So I got to know this business quite well. And what my conclusion was that there's no fricking way that these legit groups are going to make good money or good return on their investment until the government steps up and shuts down the black market, which they still to this point have not done, frankly. You know, like what happened in Rhode Island was you were allowed to grow medical marijuana. And the government, of course, being the government, doesn't understand and would never be able to catch up, just like they're never able to catch up because they're so slow. They're never able to catch up to the capitalists, right? So
Yeah.
they were allowing you to grow 12 plants if you had a medical card. To get a medical card took nothing. You paid a doctor $200, you got a medical card. Now you're allowed to grow 12 marijuana plants. Well, 12 marijuana plants, it's one thing if you're growing plants that are, that go up to your knees. These people were not growing plants that went up to their knees. They grew plants that were, 10 feet tall. Right? So 12 medical marijuana plants every 8 weeks. These people are pulling, 25 pounds worth of pot every 8 weeks. I don't care how sick you are. You ain't smoking 25 pounds of pot in 8 freaking weeks, right?
Yeah.
So then you were allowed to donate your extra medicine to other medical patients. Okay? Which means they were just selling all this freaking weed on the black market, right? And back then, shit, weed was going for like $3,000, $4,000 a pound. These guys are pulling 25 pounds out every 8 weeks times 4,000. It's 100 grand. You can see the math, right? So there was so much profit there that you were a fool not to do that, in my view, because you could set up, and this is what I was doing for these people, and most of these people were pot dealers before, but now they could grow their own, so their P&L could go up a lot, but they didn't really have the money to set up the operation. So that's kind of what I was doing. I was building their grow rooms and charging them rent. I didn't know what they were doing, or it was none of my business what they were doing. All I knew was I built these rooms, I made the investment, and they paid me rent. I owned the building, I owned the equipment, they paid me rent. And if they didn't pay their rent, then I kicked them out. But to me, that meant that these dispensaries were going to have a very, very tough time competing, because these guys, not only that, they weren't subject to the regulation that the dispensaries were subject to. They weren't subject to the taxes that the dispensaries were subject to. So how were the dispensaries ever going to compete with the black market guys like this? That was always my view on this. And that's all fine. But then recently, and I think that's what most of these people miss, all these marijuana analysts and all the people that trade, because they're not drug dealers. They're Wall Street people, and they're looking at it from a Wall Street point of view, from a business point of view. Hey, it's a new business. There could be a lot of money to be made. But they completely missed that black market side of it because they're not knee deep in it,
Well, funny enough, because they decriminalized it here. And, I played music for a long time. That's where you and I got to kind of a lot of talking when we were at the conference together in Florida. So I have plenty of guys in the bands who would like to use marijuana. And I remember they decriminalized. They opened up a lot of these stores, kind of like a liquor store, but for marijuana, government run.
Right.
And I still had buddies who were like buying it off a dealer. So I remember I'm like, why? It's like, well, he's like, I don't know, man. It's like, it's better. It's cheaper, and the guy delivers it to my door. And it got me thinking. It's like, if you think about, then after there's the unions, there's all the kind of infrastructure costs, the buildings, and all the kind of the security guards standing at the door. If you think of what the government has to charge to make a profit on that weed versus the dealer who can just drop it off in his Ford Focus in front of your house, they can still undercut the government even though it's decriminalized. So just it's interesting.
By a long shot, they can undercut the government.
Yeah.
And they're right in that the product is better. It's like the difference between buying, Budweiser and buying some nice craft beer. Now, craft beer probably costs more to make. But in this particular case, the better marijuana, the craft beer marijuana, will actually cost less to make because of the regulations.
Yeah.
So that's exactly it. You're getting better product for cheaper and more convenient. How are those guys ever going to compete with that? So I've always felt that business is never going to be what people think it's going to be until they get rid of the black market. And they're never going to get rid of the black market because, shit, in Rhode Island, there's about 10,000 people that are growing frickin' weed, because why wouldn't you if you can make that kind of money? Now, the margins have come down since then, which is why I am no longer invested in that business. I sold out of it about 4 years ago. But even so, they can't compete. They can't compete. So when this news comes out, people have been waiting on this news, right? That they were going to, reschedule it from a schedule whatever to a schedule whatever. From a 1 to a 3 or a 3 to I think it used to be whatever the worst was. It was like scheduled with heroin. And now they rescheduled it just a couple weeks ago. People have been waiting for that trade forever, right? For 2-3 years, they've been sitting on these marijuana stocks, waiting for that to happen. And I kept saying, listen, that'll get you a pop for about a day or two. And then these things are going right back down the lows, I think, because it doesn't matter if they reschedule it. They're still not going to be able to compete with the dealers. And look what happened. That thing went from, what is that, 75 cents?
If you caught the low, no, a buck to.
Right, what's it on before the gap?
This was $1.13, $1.12.
$1.13 to whatever, $2.20. So you got like a double there.
And then you're right back
down. Now
down.
it's right back down.
Yeah.
You had a week to get out of that trade. And truthfully, they've been waiting for this trade, this rescheduling thing for years. You've been holding on to this thing. Where has that gotten you?
Yeah, yeah.
And think about where you could have deployed your money almost anywhere else, and done better than this. So I don't know. That's always been my feeling with the pot trade, and like I say, I never. I don't really like to trade on fundamentals because my fundamental read could be better or worse or the same as anybody else. With this one, I did feel like I had a little bit extra info because on the fundamental side, because I had been invested and involved in the business and saw what I never heard anybody say. I never heard anybody bring that up. Literally, nobody. Any of these Wall Street people that were talking about, the marijuana trade and all that, never heard any of them say until they get rid of the black market, this stuff is not going to really get the returns that they need to get. Now, if they ever manage to get rid of the black market, these things would make unbelievable amounts of money, right? But how are you going to get rid of the black market? What, the DEA? These people they see this as a victimless crime. Okay, so you're growing some freaking weed in your basement. Like, who are you hurting? They're not going to be spending their resources going after this. They're going to be spending their resources going after, heroin and fentanyl and all that stuff, right?
Yeah.
You're going to spend your resources going after, some freaking 20-year-old kid that's growing some pot plants in his basement. Like, come on. And they're not even, what happened in Rhode Island was, in the beginning, the police were a little bit uninformed and a little bit confused as to the law. So they were, at the very beginning, going around and busting some people. And they were going through the court system, and it got to the point where the judges were like, I don't want this in my courtroom anymore. Okay? Do not bring these cases to my courtroom anymore because you're wasting my time and you're wasting your resources. All right?
Yeah.
Okay, this guy's allowed to grow 12 marijuana plants. Okay, you went to his house, you busted him, and he's growing 15 instead of 12. Like, well, okay, what do you want me to do with this guy? I'm going to throw him in jail for growing 3 extra freaking marijuana plants? Like, get this out of my courtroom.
Yeah.
So they don't even, now these guys that I still know that are doing this, they don't even bother growing 12 plants. These guys are growing like 50, 60 plants at a time now, right? Which is why prices come down, because they don't even bother with the limits anymore. Almost every single one of them, the cops could go around and bust, and they're overgrowing. But they don't have the resources for this, and truthfully, I knew not many, but I knew quite a number of these growers who were police themselves, right? Cops don't make big money, they make a decent living, but they don't make big money. And they knew this because they were cops and they were involved, and they knew they were being told to stop busting these people. So I knew a whole bunch of cops that were going out and growing it themselves, and making this money on the side. So it just shows you, it just kind of shows you. Anyway, enough about the pot.
Let's before we wrap up, let's move on to we got another email question that came in. For those who want to ask a question, we're going to try and at least have one question per call if we have some time. You can go to marketsunscripted.com. There's a little box right at the top. You can type in your question, and we'll do our best to bring it on the show. So this one comes up from, also, if you're enjoying the podcast, which I hope you are, like, subscribe. The more the podcast grows. 2026 is around the corner. We hope to get some great guests on the podcast and all the rest. So let's grow the podcast, and let's have a good time learning about markets. So a question that came in last week was from Jimmy. He says, could you possibly discuss your entry and exits? I think I heard Jason say in a previous podcast his stop is usually the low of the day. I'm curious if Matt uses a more technical level, previous day, or fractal swing low, or a percentage stop. Thank you both. So let me take a crack at that one here. I'll look at a recent trade I put on. The way I like to operate is, let me bring up my averages. Let me just bring up, let's say, Sienna, which we had been speaking on the podcast, and I took this trade. So I took this trade on the Friday above the Thursday high. I use pullbacks in a very specific way. I don't like just buying, people say, oh, it's an uptrend, buy pullbacks. Pullbacks could, is it the 10-day, 20-day, 40-day, 50-day, 80? There's always somewhere to pull back to. So one of the trades I like to personally use as a setup is if we break above a previous high and we kind of come back into that basing structure, this kind of a drop, this 10-15% is usually enough to shake out all of the momentum buyers. So a first tap of the 21-day after we break out of a base and fall back to it, that's usually an area I'll buy. I'll buy on the average, or if it can consolidate, I'll buy as soon as we resume back to the upside. So I buy for a specific purpose, a technical purpose around a basing structure. And the way I like to look at it is, here me and Jason maybe are a little bit different, but I like to keep my size consistent. I like to have about 10% of my portfolio in a stock when I put on a position. Then, if it's a very big win, I have 10% size. If it's a small one, I have 10% size. But as someone trying to find these trends, one of my risks is if I get it right, but I have a too small of a position, I still made a mistake. So I try and standardize my position size, but then that forces me to kind of be able to limit my risk in another way. So for me, the size of the trading bars is what I consider my cost of doing business. If there's huge volatility, like Jason was talking about silver, that really raises my cost of doing business, because if I'm buying above these highs, the Wednesday, Thursday high, we should have momentum. If I'm correct about this pullback washing out hands, we should get momentum from there. So I'll tend to put it below the low of the prior day. If we're breaking above these highs, we should get momentum. So either the low of the prior day, and if the risk is tight enough, I'll use the swing low if possible. But I like to keep my risks in the 3 to 5% range. So that means if I have a loss, the portfolio is 30 to 50 basis points. So not too much damage, even if you have 5, 6, 7, 8, 10 trades in a row. One good trade or a couple of good trades will offset those. So I buy with a technical reasoning. This is one example of where I'll use the pullback setup. I'll buy into strength sometimes as well, but the size of the bars is a critical distinction for me. Sometimes I'll love a stock, like let's say SNDK. I like the story, I like the rest. If you look at the size of these bars, this has been doing 10% per day on average. It really hasn't been something I don't feel comfortable trading that type of a stock. Instead, I bought MU, which had good earnings. Again, we spoke about on the podcast how I think Jason mentioned we had good earnings. When the first stall failed and we broke out a second time, then I could really target just the close of the prior day, where if we're breaking out, we shouldn't give up that momentum and go negative. So my mind is always thinking about at what point on the chart is the reason for being in that trade gone on a technical basis. And usually it's tied to where will that momentum have failed. Because if I'm putting on the risk, I want to see progress relatively quickly. And if it fails, I want to exit. So that's how I position size. And the position size then has a impact on how I define my risk in other ways. So that's a little more detail on my specific process on position sizing. Jason, I know you've spoken a lot about how you use maybe a swing high or whatnot. Maybe if you want to go into detail a little bit more before we wrap up the call today, if there's an example maybe you can use.
I think that it's all about, and coincidentally, I just did a video yesterday on this on YouTube on how I handle stops and how I handle exits too. Mm-hmm. Which came up a lot this past week because we have a bunch of people that are long silver and everybody's trying to figure out where the hell to get out, right?
For those who haven't seen Jason's podcast, his other videos, he also has on YouTube crowded market reports. So you can check Jason there as well, apart from the podcast, for those who don't know.
Right. So I literally just did a video yesterday on that. But I think that the short answer is it has to be a function, all of this stuff has to be a function for why you got into the trade, right? Why did I get into this trade? Mm-hmm. And therefore, I know where it's wrong.
Yeah.
Where it's proven wrong. And that's where your stop is, where it's proven wrong. That's where you stop out. So now you know where your entry is, you know where your exit is or your stop is, you know how much you want to risk per trade, so you know how to size it, right? I get into trades where I'm a turn picker, okay? So everybody's short, we get bad news, the market goes down but closes up. There's your news failure. I get long the close there. If it goes back through that low, then I'm wrong. It's not a turn. By definition, if it makes a new low, it's not a turn, is it, right? Right, so there's a bad news failure. So I get long on that close. If it goes and closes through that low, well, then it's not a market turn because it's a new low, so I'm out. So I know where my entry is, I know where my exit is, so I know how to size. That's how I stop. And That's how I do it based on my process. But you should do that no matter what your process is. If you're buying breakouts, all right, fine. I like to buy breakouts. Okay, good idea. Where did the breakout fail? You have to know that, right? And therefore, okay, I bought the breakout. It failed, so I'm getting stopped out because the breakout didn't work. Not every breakout works. You better know that, right? Your bet is that over time, breakouts work. Probably a good bet, but they ain't going to work every time.
Well, I would say, for that logic, because a lot of people will run that, what you have to tie with the stop as well, and I think you'll agree with me, is even if breakouts will work, it's how many will work. Because saying they'll work is that, I think what Jason's referring to is like you're going to get some really big winners, but I would argue that most breakouts actually fail. So you have to at some point be sure that you find those winners, and you don't. It's another topic I want to talk about today. We didn't have time, but one of the biggest risks is churn in over trading. You could have even a concept where like, hey, if it's a breakout, I buy it and here's my stop and I'm out. But if that is going to work 2 out of 10 times, and your risks, even though they're limited, are still sizable, and you'll never be able to mathematically turn a profit. Those 2 wins won't be big enough, especially if you don't have the patience to sit in them. When you have all these other losers, you're going to want to grab at those winners quicker. So it's really a fully integrated system. Like, as much as we want to like just talk about stops and how breakouts ultimately work, Jason's process ultimately works, but it all, in my view, it's all one interrelated system. You can't like just pick out one and change one without thinking about all the reverberations and aftershocks that it has on the rest of the system. So I just want to I didn't want to cut you off, Jason, but I just want to kind of put what I thought was an important caveat.
I think that's right. I think you're right. Like, that's just it, That's just it. So anyway, my point is your stop should be where the reason you got into a trade is wrong. Mm-hmm. Picking a turn, if it makes a new low, then it ain't a turn. It's pretty simple, right? You're out. If you're buying a breakout, okay, but if it turns around and goes back through and fails on the breakout, well, then you got to get out. The breakout's not working. You can't be like, oh, I'm just going to hold it because maybe it'll be okay. No. You can't do that.
It's a good company.
Right?
It's a good company, and they're doing good things.
Right. Who cares? Right. You can buy the next breakout if you have to.
Yeah.
Eventually, if you're right and the thing's going up and whatever, then you'll catch it. But to me, that's how you do stops, and it's the same thing on an exit. Like, how do I exit? Well, I'm getting in because I find that everybody is way too short. If I catch it and it works, well, when those shorts have covered, that was why I got in to begin with. That was what I think the edge is. So when that's gone, I take my profit. Mm-hmm. Does that mean I get the top? No. It means I get the piece that my process is trying to get.
Right.
And then it's the same thing, I don't know, again, like with a breakout trade. What's a breakout trade supposed to do? I don't know, is it supposed to get your measured move or something, or whatever it is you think it's supposed to do? That's when you get out, when it's done what it's supposed to do. Some people believe in the measured move. Okay, here's a head and shoulders, so therefore this is the move that it's supposed to do. Okay, when it gets to that move, then you take it. Doesn't mean you're going to get the top, but okay, right? Or if it's a trend following thing, maybe you put some sort of trailing stop in. Because if it's trend following, that means it should be, depending on what your trend following system says, okay, I want to be long when things break out of the 50-day moving average. Okay, well then use the 50-day moving average as your trailing stop, because then if it goes below the 50-day moving average, then clearly it's not your trend anymore,
right,
as you define trend. If you're defining trend as it's above the 50-day moving average, and I'm just saying a simple thing here, then if it goes below the 50-day moving average, then it's not your trend anymore. So get out. Use the 50-day moving average as your trailing stop if that's how you're doing it, right? Or if you're doing it because the 50-day crosses the 200-day. Okay, well then when the 50-day recrosses the 200-day the other way, get out, right? Your exit and your stop should be defined by what it is you're trying to capture.
And see, when you have your process, you don't have to follow a guru or some kind of, this is going to be the best trade ever. And you have your, and I find once you grasp that, it provides so much flexibility. It takes so much weight off your shoulders because you're just applying a process. You understand the logic. You won't get yourself into big trouble. And then after, you have the flexibility to kind of adjust your process based on what you're trying to do. You're not kind of frozen into trying to follow this guy and because I heard this and that. What is your if you can't understand what your process is, well, that goes back to our early discussions. You're not trading, you're gambling at that point. But that's a whole other kind of deep.
And then the last thing I'll say, I know we got to go, but the last thing I'll say about this, the psychological part of this, and again, this all came up, and I did this video this week because it's been coming up so much this last week or so on our Discord because we have a lot of people that are long silver, right? They're making a lot of money. It's been a big move. You know, you're talking about something that's up 50% plus just in the last 6-7 weeks, right? That's a big move. And they've been long, truthfully, a lot longer than that. So, like, they're all freaking out because I don't want to give up my gains, but at the same time, I don't want to miss out on more gains. So how am I going to get out of this thing? Where do I get out? And I think what maybe helps is realizing that, first of all, you're not going to get the top, which means you're either going to sell and it's going to go up higher and you're going to miss some profit, okay, or you're going to wait and it's going to come off and you're going to get stopped out down there and you're going to give back some profit. It's going to happen. Other than you getting the exact high tick, which is difficult, that's going to happen. So you have to accept that. And the other part you have to accept is that it's just one trade. You know, it shouldn't make that much of a difference if you give a little bit back on this trade or if you miss a little bit of the upside on this trade. If your process is good over time, one trade shouldn't matter. You should be clipping these wins time after time after time, taking your small losses, clipping your wins, taking your small losses, clipping your wins, right? So where you get out of this particular silver trade, for example, it shouldn't really matter that much. You know, what matters is following your what matters is developing a process that works and then following your process and realizing the limitations. You're not going to get the low tick and the high tick. You know, that's just, if you're trend following, you're certainly not going to get the low tick or the high tick because you're not going to get in until the trend is established, right? And you're not going to get out until the trend has established itself as no good anymore. But you can make plenty of money pulling shit out of the middle. So I think that maybe that helps psychologically to know those things.
Well, thanks so much, Jason. If you guys enjoyed the podcast, like, subscribe. I hope we brought some value. A real podcast where two guys who have taken our fair share of beatings can relate to each other from different angles. If you like it, subscribe, and we'll be back next week with another podcast. So thanks so much, everyone, for tuning in. Talk to you soon.